Good morning, good afternoon, and good evening, folks. Good afternoon from myself, as I am based in London. If you guys can see my screen and if you can hear me loud and clear, please give me a yes or no so that I know that everything is hunky-dory. So again, if you guys can hear me, thank you, Amutha. How are you? I see that you are liking and tweeting my tweets most of the time, and thank you for the support as always. And I hope that you are finding the information among everyone else over here useful, because we do share important information throughout the day about the financial markets, especially what is happening with natural gas and everything in relation to that. So for everyone else who is new in this room, today is an important session talking about stocks, because we'll be focusing on some of the energy stocks a lot today, given what is happening in the natural gas and overall in the energy market, and a lot of pressure is building up in relation to that. And also we'll be talking about the inflationary pressure and what stocks could we trade on the back of that. So which sector is very much prone to have a lot of volatility in relation to that. Well, we'll share the full agenda very, very shortly with you guys. But first things first, as always, it is important, just a bit of a background about myself. My name is Naeem Aslam, Chief Market Analyst. That is my position with AvaTrade. I come with a wealth of over 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America. Many of you may have seen me on CNBC or Bloomberg, where we share our information on a daily basis. Here are our social media handles. The recording of this webinar will be available on our YouTube channel, so feel free to see that anytime. The bit of a housekeeping and some announcements before we begin very quickly. AvaTrade's unique technology, which is called AvaProtect. All the information is right in front of you. If you want to hear more about that, and if you want to learn more about that, please do get in touch with your own account managers. Something very important, this is purely for education purpose. This particular webinar, nothing can be perceived as an advice. The full risk warning and disclaimer is in front of you. If you have any questions, once again, feel free to get in touch with your account managers. And I hope that all of you have downloaded our platform, AvaTrade, or you are using AvaTrade Web Trader. So let's begin our agenda and some really important questions right in front of you. Now, many of you may have been following our webinars for the last number of weeks, where we talked about markets rallying. A rally is when a market moves to the upside, and that happened a few weeks back, when we did see a pretty decent rally coming back in May and lasted pretty much in mid of July and August, you could also say it. But then August overall was a month which wasn't really that great. We started to see the markets breaking down once again, and we talked about the possibility is it a dead cat bounce. A dead cat bounce is something when the markets move up but they are actually in a downward trend, so that is what is classified as a dead cat bounce. So what I mean by that, if I can draw that over here, so let's say that the markets are moving to the downside like this, and then all of a sudden we see the markets moving a little bit higher like that. So if the market, this breakout, or if this move to the upside is nothing but a fake and the market continues to move to the downside, this over here is very much classified among investors and traders as a dead cat bounce. And that is what we have seen in relation to NASDAQ, in relation to the S&P 500 index, and of course the Dow Jones. Now, if you don't know any of these three indices and you are new and beginner to this particular world of trading, the S&P 500 index represents the top 500 companies in the United States. By buying the index, you have an exposure to all the top 500 companies. The same goes for the NASDAQ, which represents the 100 tech companies, and the Dow Jones Industrial represents the top 30 companies. Usually traders would buy the indices because of two major reasons. Number one is, of course, they wanted to day trade and they wanted to make profit on a daily basis. And secondly, when they have less capital, they don't have enough capital to deploy across all 30 companies in case of Dow Jones, or for NASDAQ across 100 companies. And when it comes to S&P 500, you can possibly not buy all the 500 companies, but buying the S&P 500 index, you do get an exposure. So you get a lot of hedge and you get a good opportunity for day trading as well. Now, as always, today's agenda is about this particular trend in the market, and we'll be looking at the sectors really which are under a lot of focus these days among investors and traders, especially what is going on with geopolitics. Could you tell me in few words, there are a lot of people in this room now, that what is the situation with geopolitics? Or let me ask you which way your energy prices are moving these days, because that would be a question which you can easily answer. If you are driving or if you are paying bills, have you seen those bills going lower on whenever you've paid that bill more recently, or whenever you have filled your motorbike or your scooter or your car? Did you see those bills, though, the cost of that going up or down? Going up, exactly. So for example, my car tank used to be full at 70 pounds, 60 pounds, and now the same tank for the car is costing me 140 pound plus. My utility bill was no more than 60 or 70 pound a month, and now I'm looking at 180 pound a month. So you could see the difference, the variance in those relationships, how high they've gone. Obviously, that means less money in my pocket, less spending by myself. And I'm not the only one who is suffering from this critical and significant issue. Everyone living in the United Kingdom and people around the world have similar problems. The problems are created by inflation, but nonetheless, someone is making money out of this. Which sectors are making money out of this? Which stocks we should be paying attention to? That would be our focus for this particular one. So that is why we are focusing on some of the sectors, such as a recession. Is there a stock which is a recession-proof stock? No matter how recession will continue, that stock will still do well. Is there any stock on the market which can be classified as a recession-proof? So we will look at that. What is energy crisis? So energy crisis is exactly what I have mentioned to you guys just a moment ago. So meaning your bills, your electric bills are going through the roof, your gas bills are going through the roof, your oil bills for you to fill your car are going through the roof. Who is making money? Which companies are making money on the back of that? These are good buy. Will they continue to move higher in the near future? That would be, of course, the future for our conversation in this particular segment. The next one is, of course, there is a war between Ukraine and Russia. The situation continues to deteriorate. EU is paying the biggest cost of America's stance against Russia, or its conflict against Russia. Now EU is fully embedded and engulfed in this particular war, and we as a public are paying the prices with a higher debt, with a higher energy prices, and with the peak inflation, which we have not seen in 40 years. So which particular stocks, the war stocks, are very much involved in this particular segment? Because obviously a lot of ammunition, a lot of rockets, a lot of planes are being shipped to Ukraine to fight against Russia. So someone is unfortunately making money on the back of this miserable situation, while others are being considered as a slave of this situation, and they are facing higher inflation, higher everyday cost as a result of that. Now, the next major theme is about hawkish monetary policy, which we touched on right at the beginning of this particular webinar, and that is the Federal Reserve's monetary policy is obviously a hawkish one. What sectors are benefiting from them? Which banks are particularly benefiting from this particular move? We'll be looking at that. And then, of course, the tech sell-off. Because of inflation, companies do not have the same kind of money that they had. And as a result, we are seeing cut down in the tech spending, which is impacting the revenues for the tech companies. So we'll be looking all of that. So a lot to talk about in relation to that, but we will begin the conversation first by looking at and measuring the indices first, the overall indices. That's what we're going to do. Any questions so far what we've discussed, anything which you have not understood in relation to our agenda, now would be a really great time for you guys to ask me that question so that I can answer them in a more timely fashion. So you can send me your questions. In the meantime, I'm going to continue with our conversation, and we're going to look at the S&P 500 index very quickly. We will look at the Dow Jones Industrial Average and the Nasdaq, and then we will move into the special stocks under the current circumstances. Now, when we look at the S&P 500 index, this particular area right over here is known as the dead cat bounce, as we've discussed before, because the overall trend is to the downside. We saw this market moving to the upside, initiating new particular hopes among traders and investors for the right reason, because the price was breaking above the 50, 100 and the 200 simple moving average, and traders were becoming optimistic again for the right signals that they were getting. Nothing wrong with that, because the market is obviously does what it does best, and a market is always right, but it turned out to be nothing but just a dead cat bounce. And as a result, now what we're seeing is the markets, the overall markets, once again tilting to the downside. This is where we are trading now. This was the recent low of 2022. The highly likely possible scenario is that the markets are coming into this particular area, and that means that we need to shift our support zone from this particular area to this one, and then we will hope that the price will make a double bottom, which is a reversal pattern, meaning if the price will come over here and then it will move to the upside. So for now, prices are looking bearish. The S&P 500 is bearish. I'm not going to spend any more time on that because we will cannot see the charts. Oh, sorry. Okay, here we go. So let's go through that again. So we're going to bring out the S&P 500 chart over here. So this is the area that I was very much focusing on before. Now we've moved our support zones into this particular area, and we believe that the market is likely to fall into this particular area. This is the area where the market is going to be falling to, and hopefully forming a double bottom and then moving up once again. If not, then the pain will become a lot more worse for the S&P 500 index. Now, again, I'm not going to spend too much time on it, and you can go and then watch the other recordings on indices. Now, for the Nasdaq index, once again, the area we are already quite close to, it was the lows of this particular year, and that is over here. The prices are already indicating to us that the Dow Jones Industrial Average is not only going to move towards this particular area very soon, but the chances are that we will see a breakdown from this particular area further to the downside. Now, how low can the Nasdaq index go? If that is the question, then we would be looking at the next important support area, which the next important support area, in my opinion, is going to be right over here. So it's going to be between 9,978 to 9,734. So below that critical 10,000 price mark, and at that time the price would have given up a lot of gains. Again, the two dead cat bounces failed to keep the momentum going, and hence they are called dead cat bounce. The market continues to move to the downside. Now, for the Dow Jones Industrial Average, very similar situation as the S&P 500 index. The market is very close once again towards its lows of this particular year. The chances, once again, in my opinion, is the price is not going to be stopping over here. We're going to see a breakdown. We're going to see the prices moving further to the downside from here onwards, and that means that the prices could potentially touch and then go and visit these particular price level of 25,000 to 26,000 sort of a price level. So these are the price levels that we'll be very much focused on in terms of the price action, and the traders must be paying attention to these particular price levels in the coming days. Now it's time for me to bring out the AvaTrade's web trader, and then we're going to go through each and individual important stock, and then we're going to see how the market is really going to be reacting. So the first things first, what we're going to do is we're going to look at the inflationary environment. We're going to look at what does that inflationary environment really means for the stock, and which stocks are we likely to see momentum coming to. So when we say that, now let me bring the AvaTrade's web trader so you can see the AvaTrade web trader. So the first stock that we really wanted to look at is, of course, Bank of America. So right over here. Now, as the Federal Reserve is increasing interest rate, that is obviously going to have positive impact on banks' earnings. So banks like Bank of America over in the United States is going to see quite a lot of gains in the coming weeks, as there's a lot of potential that the profitability will increase. Right now, the market is indicating that the price action is weakening. So we're seeing that the price action moving to the downside. The price moved lower and it went below its 50-day simple moving average, which confirmed the bulls are no longer in control of the price action, and prices are moving to the downside. But again, as I mentioned, Bank of America is a bank, and when the Federal Reserve increases interest rates, banks, their margins increase, so they should be putting out some decent reports very soon in the next quarter when we will hear them. But remember, at the same time, they will also be talking about precaution and recession warnings and the impact of recession, so that could influence that. But the question now really is that what we should do in relation to Bank of America's stock. Where are we moving next? So remember, this was the area that we picked up long time ago, and then you can see the webinars on our YouTube channel for that. So the price did come into this area, and we did see the prices moving to the upside. So we did see that sort of a reaction coming back, prices moving to the upside. So we saw this sort of a dead cat bounce, but now the prices are moving to the downside. So if the sell-off continues for the overall market, the area of 28 to 30 is going to be no longer attractive for the market, and the markets will be looking at the next important area of support. And guess which is the next important area of support? The next important area of support is going to be $18 to $20 in terms of Bank of America. Now, another stock which is really going to be quite interesting one to watch is going to be Barclays over in the United Kingdom, right? Let me see. because Barclays, and you know, Barclays is a British bank, and then we know that the interest rates are going higher. They're moving only in one direction over in the United Kingdom as well. So we would expect a similar sort of a price action over here with respect to Barclays as well. So you could see what Barclays has done recently is very much holding on to its particular price action quite a lot, and it is trading in this sort of a right over here. So let me click on this line because I don't want the line to extend to the left. Okay, only extend to the right. So, and we're going to draw another symmetrical triangle, but again, we're going to have the same issues in relation to that. And in order to resolve that issue, I'm going to click on the line, and then I'm going to say do not extend to the left. We can increase this length, the size of this one. We can change the color. So let's do that for this one as well. Click on the wheel. We will increase the width and then change the color to make it a little bit more prominent. So what you can see from this particular price action is that the price has been trading in a narrow range in a symmetrical triangle. But where is the next important support zone in relation to the price action is going to be that 88.2 over here to 99. So that is important. So if Barclays continue to sell, which again not likely the situation because the earnings is supposed to be very good, but given the Bank of England is producing pretty decent numbers, so we should be seeing pretty good numbers coming out from Barclays. Now another stock in the remains staying in the same sort of section in the same sector is Goldman Sachs. So what we see in terms of the Goldman Sachs is this is an investment bank, which is holding on to its gains relatively well, as you can see. So because the overall pressure is going to push the prices to the downside, but the banking sector is set to record some really important and positive numbers as we continue to move forward. So Goldman Sachs, the important support zone is going to be 286 to 271. Followed by that is 184 to 202 sort of a price level. So we would expect the overall sell-off to influence prices for Goldman Sachs and then push them right to 271 to 286. And that could be a great opportunity because remember, interest rates are moving higher, and that means we could see pretty decent results from this one. Now, another one, staying within that one, the banking sector and moving into Europe, because Europe is about to increase the interest rate over here as well. So, but we see that there's a lot of weakness coming into the Eurozone's economy in comparison to the UK, in comparison to the US economy because of the energy crisis. As I said, Europe has become a slave of EU, America's dictatorship on a global platform or with whatever country it wants to pick up a war, and Europe this time has become a victim. And because of that, there is a lot of pessimism among investors and traders. So if there are banks which you wanted to avoid, which you may want to avoid, is of course European banks, and Deutsche Bank is sitting on top of that ladder. But overall, the outlook is somewhat positive because ECB, the European Central Bank, will announce higher interest rate tomorrow, and that means that we could see more favorable climate for the banking sector over here. So that is your chart. This is your important support level in relation to that. Now let's change our gear and then move to something which we wanted to move to the energy sector, because what is going on in relation to energy sector. Now, of course, everyone knows that our bills are up, and the companies which are making money on the back of that are your energy companies. Now, we have been waiting for this particular zone to be hit by prices for a long period of time, but prices never came close to those particular area. Now, given the crisis that we are going to see in the energy sector is still very, very positive. So now we have to move our support zone from this one to this area perhaps, and then hoping for the prices to come and then retest their 50-day simple moving average. We're going to leave this one where it was. So this becomes our overall bigger support zone, while this one becomes our short-term support zone, and we will hope for the prices to come over here. But overall, you can see Chevron on the weekly time frame is very much hovering near its all-time highs. Any questions so far? Now I'm going to move on to the next stock within the energy sector, and then we will bring BP now. Okay, because I'm not on the right server over here, so I don't have all the stocks because this is still an MT4 server. So on MT5 we have a lot of stocks over there. So okay, so let's move to our MT5 platform where we will see a lot of these particular companies. So you can see that the Goldman Sachs is over here and everything else. So what we're going to do now is we're going to go right towards over here, and then we're going to pick up our stock. So I'm going to be bringing some of the energy companies. If anyone can see them, just tell me if you see BP or Shell over here, because there are just so many stocks over here to look at them. Is everyone with me so far in relation to what we have discussed in about the price levels and everything else, while I try to find the stock over here among my so many of the stocks that we have over here? You see, like over here, HSBC is again another really great stock to focus on. Now let me bring the BP, which we couldn't really find it on that platform, but we have it on MT4 platform. So see the trend on the daily time frame. The trend is your friend, and then the trend is really telling you over here that the prices are moving to the upside. So there's a very, very strong trend in relation to this particular one. And we see the prices moving to the upside. As you can clearly see from here, prices moved from the 206 pence to all the way to 450, doubling the prices. Prices are near their 2020s highs and near the level of the 2020, and there is still a lot of room left before the COVID crisis began, and that was like 2019. So we would expect this particular company to continue to do well, continue to perform well, continue to move higher. Now, if you are looking for some sort of a price levels to look at on the daily time frame, your immediate support zone in relation to that is going to be between 427 to 438, with a massive scoop to the upside, with a massive potential to the upside, and then that's where we will be very much focused on. Now, another commodity related stock that we are also wanting to focus on, given the inflationary pressure, given what is happening in the commodity space, is of course ENI over here. So again, ENI this is a European stock and a European stock. So it has seen a little bit of a retracement more recently, but still very much maintaining its trend, and it is still very much moving to the upside, and that is certainly very, very positive in relation to its in relation to the overall trend. But like Shell or like Chevron, the prices are taking a little bit of a toll on that. So if price breaks below the 50-day simple moving average, we're going to be looking at the price of 10.49 to moving all the way to 10.69, sort of a price level where we kind of wanted to come back, and we wanted to look at this particular price action and then see it with the potential of buying it. But overall, the trend for Shell and then the trend for BP, they look a lot more better than anything else. So if you are looking to buy energy sector, if you're looking to do something along that line, then you can do that. And remember, you can always look at the overall energy sector ETF as well, which is called XLE. That would be quite good to look at as well at the same time. So if you are looking to do that. right? So now let's shift our focus and then let's move to the next sector for the last minute or so. And the last sector now, which I wanted to really focus on, is we've done the banks, we've done the energy sector, we've done the energy sector as well. The last sector that I wanted to focus on is your you, let me just bring that stock up over here. Just give me a second. Is your consumer discretionary, so or you know, companies like Amazon, because Amazon is going to be performing quite still sort of well. So here is another energy stock that we wanted to look at, which is your Exxon. Exxon is again trading near its 2022's highs and still very strong trend. If you wanted to buy Exxon within the energy space, then it's got to be where the 50 and 100 S&P moving averages are trading, and that is 90.75. Now, one particular company that I really like personally and is massively oversold these days is Facebook, now known as Meta. I certainly want you guys to keep an eye on this particular company because, for disclaimer purposes, I have a long position, and I think this company has a massive potential given the sell-off that we have seen in its stock price. And now the prices are consolidating towards their lows right over here. A lot of consolidation happening. Further potential low could also be coming for Facebook stock, which could push the stock price to 136, but still pretty much remains solid. Now, another stock which is again going to be pretty decent, and we call them sort of a recession proof, is your Microsoft. It is moving to the downside, and it as a result of a spending cut and all of that, but 236 remains a pretty decent level. The last one I wanted to look at is your Google over here. Google stocks, again, spending, marketing, all of that is under a lot of pressure. Prices are likely to move to the downside, but the company is very solid and represents a lot of opportunity for investors and traders. The buy price for me, the best buy price is going to be between $90. Right, that's all for today in our webinar, and I hope that you guys kind of enjoyed it and then got a lot of nuggets through that. You remember, you can always go back and then watch the recording and learn more from that, or you can continue to follow me on Twitter where we share important information. That's all for now. See you guys next time.